Hello everyone, this is CoinTrader96 from Chart Engineers, and in today's lesson we are going to explain how we are putting the theory from the entire syllabus into practice. In the previous lessons we have discussed the following. We have discussed market structure, liquidity, price and time, fair value gaps, price delivery and entry techniques. All these subjects playing an important role on how we understand price and on how we trade the markets. So in this lesson we are going to show you how I put the syllabus theory into practice on a price chart. So let me reintroduce myself real quick. I'm CoinTrader96, and in this lesson I'm going to show you how I'm currently trading the markets. My main focus is the foreign exchange market, and for my methods I'm using the daily direction, I'm using H4 market structure and order flow, and for my entries I'm using M5 breaker zones and fractals. All my entries take place within the London open session and within the New York open session. If you forgot on what times these sessions occur, I would recommend you to go back and watch a lesson about price and time. For my targets I'm using 3R, which means that I am risking 1R to make 3R. So for example, when I'm risking 1k euro on a trade, I can make 3k euro when my target hits, and I'm losing 1k euro when my stop loss get hit. I'm now going over to actual TradingView chart and show you on how I put the theory into practice. On this chart you are seeing the daily time frame on Euro USD. Euro USD is my main pair in the foreign exchange market, and like I mentioned before, I'm using the daily time frame to help myself with the direction of the market. I marked out a few significant levels on this chart. I will go over it real quick, but first, to help you visualize the swing points in the market, we created a swing point indicator. You can find this indicator in the trading tools section on the dashboard. So let me put it on. So now you will see all these swing points in the market on the daily time frame, and it will work on any time frame. So here you can see that we had a swing high here. A price pushed up for a liquidity rate, rejected hard, and the market structure break here because this is less swing low before the sweep. Price pushed lower, so we had the market structure break here. Price had a retest of this breaker zone because the breaker zone is the last down candle before the sweep. So this entire area, the gray box at the top, at the retest here, price coming lower, and now price pushing lower more. And you can see how price is running back, having a new rate, so a liquidity rate inside the bearish breaker zone on the daily time frame. And you can see how price is moving lower aggressively. A new market structure break. So at this point we have a confirmed downtrend in my opinion, because of the break of market structure here. A new rate, new market structure break, and you can see the price left a fair value gap here. So only sell side being delivered in this blue shaded area, and this area here, only sell side being delivered. So if we extend this level like this, you can see how price came back into the level, and you can see how price is expanding lower aggressively in 4 daily candles. And you can see that price moved lower 268 pips in 4 daily candles. So this is a huge expansion, and when price expands into support like this, we can expect some kind of reaction to take place, right? And I marked out this gray area here because this is a daily rate candle, because with a daily sweep here, price broke structure here, pushed up, and now coming back into this previous level from November last year. And I'm marking this out because this level could give a potential bounce on price. But we are not going to blindly long here on the daily with stops below or anything. We are using the H4 market structure to confirm that the daily wants a reaction of this level. So let me put off the swing point indicator because we currently don't need it. So now we are going to mark out the inefficiencies in this area because price moved down 260 pips in 4 daily candles, so price is probably has left a lot of inefficiencies, and we mark out inefficiencies in the form of fair value gaps. So here you can see this blue shaded area, only sell side being delivered. See this area here? It's only sell side being delivered. So if price wants to react from this level, we can use this level as a draw, like the next area where price could reach for. So I'm just extending it like this. So in order to confirm the ID that the daily time frame wants a reaction from this daily rate candle, I'm using the H4 mark structure. So let's go over to the H4. So this is the daily FVG. So let's mark it out real quick. D1 FVG right here. So this blue shade area could be a draw if price wants to have a daily reaction of the daily rate candle. Now we are going to monitor the H4 time frame for a possible reversal in this level. If the H4 doesn't shift market structure, we can expect price to roll lower. Let's play it a little bit. So here you can see our price is having a nice reaction right on the H4. So what we do now is mark out the last structure high before the low, which is this swing high here on the H4. Right? So on this close right now, we had the market structure break on the H4. So we are inside daily support in the form of a daily rate candle. Price is pushing up and now breaking H4 market structure. So at this point, we can expect some more upside to happen in the next couple of days, with the daily FVG above as a potential draw on price. Let's go further. So now we have a H4 fair value gap here, right? Because we have nothing else to work with at this moment. All we have is a daily support, H4 market structure break. So what I use is the H4 inefficiencies that were created on this push up. Now right here, you can see how we had the market structure break and price came back into this level, right? So at this point I got a daily direction figured out, and I also got bullish H4 market structure at this point, because with the H4 market structure break, price pushed up, and at this point price is coming back to fill in the fair value gap right here. So at this point I am bullish on the lower time frames because I'm expecting a reaction from this level for a possible push higher with a potential draw to fill in this daily fair value gap. So let's go over to the M5, because the M5 is the time frame I'm using to frame my setups. So this is the M5 time frame, or the 5-minute time frame on EURUSD, and I'm now going to show you how I frame my setups on the M5 time frame. So we know that price had the market structure break, right? All this price action between these two vertical lines is Tuesday's price action, and you can see it here. And on Tuesday we had the H4 market structure break. So at this point I want to look for buy opportunities when price comes into the H4 fair value gap. The red shaded area you are seeing is the London open session, and the green shaded area is the New York open session. You can find this indicator for free in the indicator section on TradingView, and it's called ICT Kill Zones version 2, and these are my settings. So you can take a screenshot of this and copy the exact same settings, so you know where the London open starts and when the New York open starts. So here we have London open. In London open we had the H4 market structure break. And this is no session for me, so I'm not looking at the charts. And here New York open starts, but we haven't touched the H4 fair value gap yet, so I'm not doing anything yet until price starts tapping into the H4 fair value gap, because that is the area where you want to do business in. And here we had no tap, it swerved a little bit, pushed up, and here we had the first step in the H4 fair value gap. But when price tapped the H4 fair value gap, we're already going outside of the New York session, which is basically when I'm not trading anymore, which is 6 p.m. So at this point we are not doing anything. So we are going to look for new opportunities on Wednesday. So here again, between the two vertical lines, we see Wednesday's price action, and here you can see our price finally coming into the H4 of our value gap, because the blue shaded area is the H4 of our value gap we marked out earlier. So we are going to look for rates now, sweeps or liquidity rates or any form of manipulation. Here you can see our price is consolidating, pushing lower, so AMD basically, accumulation, manipulation, distribution. So we can mark out this rate here, because this is a M5 sweep. Price did in fact close below, but I count it as a sweep because we had a violent reaction of this level. Price delivery was also bullish because we're having AMD, accumulation, manipulation, distribution, and we're also inside of the H4 of our value gap. So I'm counting this level as a sweep. So now we are going to mark out the M5 breaker zone, which is from the last up candle till the sweep. So this zone right here. So let's up candle till the sweep. And now we are just going to wait for London open to start before setting limits, because I'm only allowed to set limits when the London open session has been started. Now you can see at 8 AM the London open starts. So let's mark out the risk to reward tool from TradingView to visualize how the trade looks like. So right here, London open starts, so we can set our limit. And here we got the fill, and I'm aiming for 3R right there. So my target is 3R. So for example, if I'm risking 1k on this trade right now, I'm making 3k when price hits my target, because from my entry to my stop I'm risking 1k. So if I'm pulling the FIB tool here, you can see that when I'm risking 1k from my entry to my stop, I'm making 1k from my entry to one standard deviation, which is basically the same distance. So when I'm risking 1k here, I'm making 1k from here to 1R. And this is 2R, so I'm making 2k, and 3R, so I'm making 3k. So I just explained how a risk works basically. I know a lot of you already know this, but I just wanted to mention it one more time. So let me remove this. So here you can see London open starts, price pushes away, coming back into the level and pushes, and that's my TP. So on Wednesday we had our first win here. So let's go to New York if we find any other opportunities. So London open ends here. So here I'm not trading anything, I'm off charts, and now New York open starts, so I'm going to look at the charts again. And here you can see that price rates a low into the H4 for value gap again. You see that? So we get a M5 sweep, and here we the M5 market structure break. So M5 sweep, M5 market structure break, so price pushes up. So at this point we can mark out the M5 breaker zone. And if I mark out the M5 breaker zone from here to there, you can see that this is the last up candle before the sweep. But if I measure this zone from there to here, you can see that the zone is more than 10 pips, and I'm not a fan of levels that are bigger than 10 pips. So when my levels are bigger than 10 pips, I'm going to look for a different level that I can use for my entry. So when I'm not using the breaker zone, I'm always using the rate candle, and the rate candle is the candle that caused the sweep. So this little white candle here, and this zone is only 6.6 pips, so this is a valid level for me. So we are in the New York session. We had an M5 sweep and an M5 breaker market structure, and our price is pushing back up, so we can set our limits in this gray rate candle right here. So we put our R2 again right here, stops below, and then aim for 3R right here. So this 3R. So you can see how price comes back into the level, push away, and 3R has been hit. What you may have noticed is that price was already outside of the New York session. But once price is outside the New York open session, I'm trading my stops break even and just hold the trade till 3R. I'm just not looking anymore because I am closing my chart at 6 p.m. because I'm down for the day. So I just throw my stops break even and let price do its thing. So on Wednesday we had 2 wins, one in London Open and one in New York Open. Both of M5 breaker zones, with the ID of price going higher after touching the H4 fair value gap. So let's go over to the next day. So session over, here, next day, Thursday starts here. Let's mark out some things here from Asia. Here you can see that rate, here you can see that price came below the swing low on M5, pushed up. Let me zoom in a little bit. Here at the last up candle before the sweep, so the M5 breaker zone. This is the last swing high before the sweep, so this is the market structure break right here. And you can see that price gave a nice buy opportunity again, but this was outside my session. It was at the Asia session, you see that? It was, the entry came around 3 a.m. my time, so this is the Asia session. So when you are awake you could have taken this trade, but I'm not trading in Asia. So but I'm just marking it out because this was another win here. And we are still bullish, so we can still long. And then here again, you can see a clean AMD pattern. Accumulation, manipulation, distribution. It was also into this level right here from Asia. But this was also too early for me. See, that's 7 a.m. and London Open starts for me at 8 a.m. So I couldn't have executed this one. You can see, right? Here. Accumulation, manipulation, distribution. Very clear. Here you can see that price had a swing low right here, right? Template, rate. A clean swing low here. And price rated at low and pushed up. Broke market structure on this candle here. MSB. So we had a sweep here. And breaking market structure. And then we can mark out the last up candle before the sweep, which is the M5 breaker zone right here. So we missed the Asia opportunity, right? But then London Open started and with a clean M5 fractal, and we could have longed this one again. So entry here, stop loss below the low, and target at 3R. Right there. Sweep, break a market structure, return to the origin, so basically the retest, and then we are long here with target at 3R, stops below the low. So now let's go over to the New York Open session, which is the gray shaded area. Here you can see how price is consolidating, forming equal highs. As you can see, the high in London and the highs in this session where I don't trade. Price is forming equal highs, and let's find a fractal, because in London price had created a new M5 fractal or M5 breaker zone. You can see that right there. Here you can see a sweep. Here's the breaker market structure on the M5. This is the breaker zone, and here you can see that we had the accumulation phase, price pushing lower right into New York Open. So when price was sitting here, I could set limits, my limit orders in this area. And so the trade will look like this, and TP at 3R right there. So here we had our entry. So we basically bought the manipulation because it's accumulation, manipulation, and distribution. So a very quick TP at the beginning of New York Open. So very clean PA, and in the end it reached for the equal highs here, but I'm just TPing at 3R because that is my system. So now price is coming lower, and I was looking for a new long because we didn't have met our daily objective. So the longs were still on in my opinion. And then here you can see there were no M5 setups, no M5 sweeps. So there was nothing to play in this case, and that was it basically for Thursday. And here we, at the end of the New York Open session on Thursday, we had reached the daily fair value gap, So at that point my daily direction has been met and I have no bias anymore. So let's zoom out. Here you can see our price falling lower on Friday. I don't think there were any setups here. It was leaving equal highs, no retest, and the price pushing lower. So as you could see, on Wednesday and on Thursday there were 4 long opportunities of an M5 fractal within the direction we already anticipated in the first place. So here you can see on the H4. So here you can see that we had the H4 market structure break here. We filled in the H4 fair value gap, and from this point we anticipated price to reach for the daily fair value gap. So all I do now is wait for M5 fractals to be created and enter within the London open session and New York open session. As you could see, we had 2 wins on Wednesday and 2 wins on Thursday, and that's basically how I trade. I try to find the daily direction and where daily could reach for, and then I use H4 market structure to confirm that ID, and if the H4 confirmation is there, I can zoom into the M5 and look for my entry patterns within the direction that I'm anticipating. So let's go over to the daily real quick, and here you can see that we had a nice reaction of this daily rate candle, which we were anticipating. H4 market structure break to confirm that ID, and the daily fair value go as a draw. So in 3 daily candles, price reached my objective, and that's basically it. So now I explained how I trade the markets on Euro USD. This is basically my current approach. I look for daily direction, H4 market structure, and entries of M5 fractals within the London open session and the New York open session.